Yo guys, good evening. This is the what? It should be around the four, the 3, day 4. Let me see. Right. So in the morning I did where's that? Okay. In the morning I did basically talk about time frames and candlesticks. Right. So I'm just going to do a quick recap of what I talked about in the morning, and it's actually very instrumental because when you're dealing with the chart, you're basically dealing with price and time. So you're basically trying to understand what price is going to do within a certain time. Okay. And that is what candlesticks and time frames are. Candlesticks are basically price action captured within a candle, and each candle is dependent on each candle is just like a block of time. So basically, what you're seeing on the chart is price action captured within a block of time. All right, so that makes sense. So let me just quickly do um some shares. All right, so this is 1 more minute until we're supposed to start. So I'm just going to quickly spread the word. Right. Let me see. Quickly. Thumbnail. I trust you all have had a nice day, and I hope you were able to spend some time on the charts. All right. This is okay. 9 o'clock. So what are candlesticks? Candlesticks are basically visual representations of price action captured within a time frame. Okay, so if you're on the 1 minute chart, every candlestick you see is a 1 minute candle, and it takes 1 minute to print, obviously. So it's capturing price action within a minute. So whatever price does within 1 minute is what is going to be captured in a 1 minute candle. Same thing applies for 15 minutes, 30 minutes, 1 hour, and what have you. And the same thing we do with our time. We say 60 seconds make 1 minute. Okay, so inside every 1 minute candle, you're going to see 61 second candles. Inside every hourly candle, you're going to see 61 minute candles. So everything from the small time frames builds up all the way to the bigger time frames. Okay. So this is why it's important to understand time frame correlations, how you correlate time frames. And ideally, when you're trading the market, all you actually need is just three sets of time frame. You need a high time frame, you need a low time frame, and then you need a like mid-range time frame. And this is because you want to start from the higher time frame to build your trading idea, know where you are in market structure, know where you are within the pullbacks, within the market structure. And then you want to now go down to the mid time frame to get more details, as to where you are, and then set up your trade ideas, and have your setups and all of that. And then eventually when you want to execute, you now want to go down to the lowest time frame. But you can be fluid with all of this. You can just keep, moving between time frames. But ideally, you want to start from the higher time frames so you have context. Okay. So I have a Forex course that's on my YouTube channel, Minimalist Forex course, and it's basically a course that does not. I basically just cut out all the fluff, everything from like indicators that I don't use. So I just give you everything I do. All right. So what we're going to do is quickly. What's this? Okay, I'm just going to share my screen. Just going to share my screen and do a mini recap of what we did in the morning. Okay, it's the weekend, so you can't find currency pairs moving. You just see cryptos mostly. So I think I'm going to do analysis on cryptos. But first, I'm going to explain what I mean by. I'm just going to show you like a few characteristics of the candle in the market. So you can just check the calls to get more understanding, to gain more understanding. Of course, you can watch other YouTube videos that explains this concept. Okay, so let me quickly. Yeah, this is it. I'm just gonna. I also talked about supply and demand. Sorry, I also talked about support and resistance. And the analogy I used was imagine a house with imagine a house with 3 floors. So you're in the middle floor, right? So there's somebody that lives in the house and his name is Price, right? And what he does is he basically just lives in the house. He doesn't go out, and all he does all day is just move around. So when he's very, very excited, he jumps all over the place, right? But because the structure is solid and is standing on a support that is able to hold his weight, it does not fall into the it does not fall into the floor below, right? Because the support is holding his weight. At the same time, he has a ceiling above him that keeps him from jumping into the floor above, right? So that's basically support at the bottom and resistance at the top, and then price just bounces in between support and resistance. Okay, but at some point, price gets really energetic that he could just jump above, right? And then you see when he jumps above into the top floor, it now becomes basically jumps above into the top floor. It breaks the ceiling and jumps and like appears in the top floor. What was once his resistance now becomes his floor, right? So if you walk upstairs to the top floor of your house, you're going to be walking on what was the ceiling of the floor below. So support that's how resistance becomes support, and then support can still become resistance, because if you go downstairs, your floor now becomes a resistance. I hope that makes sense. I know a lot of you are going to catch this, right? So um I was trying to do okay. I was trying to do some. I think I'm good. I think I'm good. I think I'm good. Okay. So yeah. So let's just go back to the charts and just correlate time frames. So I said ideally what you want to do whenever you're on the market, whenever you come on the chart, you start from a high time frame. You don't have to go all the way to the top. You don't have to go to the monthly. But if it's going to provide information that you need, you should. All right. So when you look at this time frame, this is a weekly chart on Ethereum USD. It's a weekly chart. Let me go to the monthly first. Let me see what price is doing. So overall, it's a bullish trend. You know, price came from this point, created a high, created a low, created a high, created a low, created a high, but it has failed to break this high. For the bullish structure to continue, it has to break this high, right? So price started pulling back. Okay, created a lower low. So if you look at the structure, what you can find is price took out a high here, took out a high there, and that's why it's reacting off that point. Okay, took out a high here. There's a mini um there's a mini supply zone from the base of this candle to the top of this other candle. Zoom out. Price is reacting off those points, and this is the monthly. So like all these candles are very, very condensed. Each monthly candle contains 30 to 31 daily candles. So you see how much information is within each of these candles, right? But what you want to do is, obviously, whenever price breaks structure, like it did here, it's going to pull back, right? And that pullback is going to have to come to an end at some point without violating the low. So you have this low here, you have this high up here. Okay. Have this high. I'm just going to okay. You have this high. So now what are you expecting? Price has to um if I can even be consistent. Okay. So price has to pull back, right? If you look at this low, price made if you look at this point, price made this high, made another low, but like it failed to break this low. So price started going up from here, broke structure, created a higher low, and then eventually broke all the structures here, and then went up to break the structure. Okay, so when it's pulling back, what are we expecting? Expecting price to come down. Okay, take out this low. Why is it going to take out this? Why is it supposed to take out the low? Because it does not have any structure to the left. It does not have any structure around here for it to, clear liquidity from, right? So it's going to have to take out the entire low that started the move. Okay, if the market was like this, if the market had done this one time, let me change this. I don't like this arrow. So if the market had done this, it would have come down. Sorry, no, this is wrong. If the market had done this, this, price would have come down from here, taking out this low here, without taking out this low, and it would have gone up. But because what price did was created a high, created a low, created a high, created a low, and then went all the way to the top, broke a you know. So when price is coming down, price now has to come down to take out this low before going up. I think this is not. So this is what I mean from here. Price created a high, created a low, created a high, created a low. But the point the where price shot up from that cleared this high was from here. So it just went all the way to the top and broke the high, right? So this high was cleared by this move. So liquidity is going to be below this area. So price is going to have to come down. That's why it came down, took out this liquidity and started going up. Okay. So that's where we are on the monthly time frame. All right. So at this point, what we are looking to see, obviously the pullback has started. Like the pullback has ended and then it's beginning to go up. So I want to see break of structure to tell us, or change of character, whatever you want to call it, to tell us that the bullish move has started. So now start going down to the lower time frames. From the monthly, we're going down to the weekly. There's not much information here. All we can see is that price is reacting off a supply, which is bound to happen. You know, reacted off this supply and then it's coming down. So overall, this is an attempt to now create a weak low. Because this low is not going to be able to take out this low and then eventually break structure. This is what we are looking for, right? But if we come lower, we are going to obviously find more information. So when you look at this, I'm just going to close this because okay. So when you look at this now, you see that price had this big push. So let's track all the highs and lows. This was a high, all right? Price is bearish, so we're expecting what? A low. Okay, the low was here. So it's low. This low. Price went up to create this high again. Created another high. Came down to create this low. Went up, created this high. Came down to create this low. Okay. So this is the low that price has to take out for us to say structure has shifted. And price took it out from here, from this push. It just went up. Okay. So we have a situation that looks like this, 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 and then boom. So what are we expecting price to do? Price broke the structure, right? So we're expecting price to now come down, take out this low before eventually going up. So we're expecting price to do this, come down from this point, take out this low before going up. And we've established the fact that price is always going to react off supply and demand. All right. So when price takes out this low, where are we expecting price to stop? Because if you look at this point, you're going to see like big money came in here, you know. So that was a clear demand zone. Price was supposed to do this. But that's what everybody's that's what I mean that's what everybody's going to be seeing, right? Put your stop loss below this low and trade all the way to the new supply, which is this, you know. Let me draw it out. Which is this. I'm just gonna color it red, which is this, right? But because they'll be looking for opposing liquidity to, grab and then shoot up. Price is going to break this low, and then when it breaks this low, where is it going to stop? It's going to have to stop at this demand zone here. Okay. So what price is going to do now is price is going to come down into this zone. Okay. This is information we are getting from the daily time frame, right? So we know we are actually going down. This is what we already know. This is where we are. But now we can't just wait until price comes all the way to this bottom to get a move, to catch a move. So we want to analyze this area, So we have to have to keep coming downward. Okay. So what we want to see is we need to see price change character. So what do we do? Track the movement of price. We had this low, had this high, had this low overall, we have this high. So high, low, and then eventually high. Okay. So this was what price was doing. Went up to this high, came down to this low, went up to this high, came down to this low, and broke to the top. So typical bullish structure, right? So what are we expecting price to do? At what point do we now, get comfortable with the fact that price has broken structure? Is when price breaks this low. Okay, but this is the H4, and as you can see, you can actually consider this point to be another low. This point to be another low because this is the daily time frame, and price has cleared it because you have candles that came down and closed. You have like a lot of candles that closed below this area. You know, you have this candle, this candle, this candle. These are all H4 candles, and three of them makes up about 12 hours of price action. Okay, so doing price kept doing this, you know, within this area, right? So expecting price to eventually come down to take out that area. So what do we want to do in this case, in this scenario? Price is always going to react off demand. Okay, there's a demand zone here. There's a demand zone here. This is the daily demand zone. Price came to it, rejected off it. It didn't get into that area, but it just went up and then eventually came down. That's why you're seeing all these reactions. So we're expecting price to now shift in some type of way, like just like shift temporarily and tap into liquidity at the top, all right, and eventually fall. Okay, so price is always going to react off supply and demand. It's reacting off this demand. There's a supply zone here. The price is definitely going to have to react off. So when you go down to the 1 hour, we start building our trade ideas. Okay, see a break of structure on the 1 hour. What is price going to do? If you look at this area, price has no serious structure behind. Like this move was quick. Like from the top, it just came down. It doesn't have things like this. Okay, it just came down. So where's the liquidity going to be? Above this point. The liquidity is. In as much as price is going to react off this point, we know it's not going to come down unless it has tapped into this liquidity before it's going to break below. All right, to an extent, that's what we're expecting. So, and this zone even coincides with this zone. So these are all areas that should have liquidity above. And to add to our confidence, we now have a supply above this point here. So no matter what price does, is this working? Okay. No matter what price does, we're expecting this to happen. Expecting price to now, because it has broken structure, what are we expecting? A pullback. A pullback to take out liquidity, tap into supply, and eventually fall. So now at this point, we're trying to capture what? Trying to capture some buys. Let me see. This has been mitigated already. Oh, it has. It was mitigated by this candle, so price doesn't have to come down. So when you go up, the freshest demand you now have is this one. This candle before this candle. All right. So that's the price it is. So we're expecting some form of bullish structure to be formed. And it has not happened yet. It has not happened yet. Price is still heavily bearish. But at this point, it's beginning to shift because price has tested this area. Tested this area like this. All right. And then it's failing to create a lower low. So as you can see, you're already having bullish candles. Bullish candles. But just to be on the safe side, if you go down to the M5, it gets choppy as it goes down, and that's why I don't like coming down, especially when it comes to Bitcoin and Ethereum. It gets really choppy. So what I want to see is price clear this high. Once price clears this high, we're going to have a trade. I think we'll be doing this tomorrow, maybe even later this night. But price is going to clear this high, come down to clear this low. It depends on how price clears the high. Seek liquidity, tap into supply, tap into demand before going up. So the moment price does this, you're going to take a buy. All right. And we're going to buy into this area. Okay. So that's that. This is how you start coming from the higher time frame down to the lower time frame. And this is what we call multiple time frame analysis. Okay. It's just a bunch of fancy words that just tells you you're combining more than one time frame to give you an idea of what the market is doing. So you're not on the wrong side of the market. All right. So um yeah. Oof, I'm just gonna okay. So let's go to another chat. Sorry about that. I just wanted to try out that feature. Let's go to another chat. Let's go to Bitcoin. I don't know. I have a trade on Bitcoin. I have some running trades from. I had a trade on Ethereum, but I had to close it because like it wasn't ready to move. It wasn't ready to move, so I left it. So the same thing with Bitcoin here. Starting from the daily, we know we are at. We had this. Okay, let me start from the weekly. We are at a bullish bear structure. We have bear structure. Price shot up from here, leaving behind a really big demand zone here. It has not been mitigated. Price has not touched it yet. And then price broke the structure. So price is going up to test it. Okay. Let me just clear all of this. So cluttered. Take this out. Take this out. It's not what I need right now. This is so stressful. But anyways, this is where we are in the structure on the weekly. From this high, price came down. Price has pulled back like it really, really pulled really, really deep into the swing. Okay. And pulled really deep into the swing, but it has not broken structure yet because it has not taken out this high. So it's seeking liquidity. It has tapped into this supply. Let me show you what that looks like. Let me close all of this. Oh, shit. Let me close this positions, orders. Okay. Then I can just delete, 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 delete. I'd actually love for you guys to be here so you can what's this? Share your charts and then we just analyze together. But that'll be happening in the future anyway. So okay, so price has tapped into the supply here, you know, and it's holding so far. It's holding because let's analyze this for a second. Price did created a high, created a low, created a higher high, created a higher low, failed to create a new higher high. So it stopped here and then broke structure. Okay, and then went up, pulled back, went up, tapped into this point, and then went down. So this is where the structure shifted. The structure shifted here, eventually came down. Okay, so what are we looking to see? After price broke this low, price has pulled back, so that low is gone. Price broke this low, price has pulled back. But since price broke this low, price has this supply still not filled. So that's a target. right? That's why price came into it. So now that price has come into it, we're expecting to see structure start shifting bearish for us to start taking our sales all the way to the bottom, right? So I'm just gonna 5 minutes. This live stream is not going to be long. It's to be at most 30 minutes. Okay. So when we observe this structure, what do we see? We see high, low. I'm seeing high, break of structure, right? Failure to make a higher high. So this is a weak high, and then you have price doing this. So if you look at this critically, this was the highest point before price broke the structure here. I'm just going to take this out. Price broke the structure, came down, pulled back, because of course we're going to find pullbacks. Took our liquidity by clearing this high, the high this week, and then has failed to come down. So we're expecting it to come down. So because it has not come down yet, we are just going to keep track of everything that is happening. Let's now go down to the internal structures that was formed within, all this mess that is going on. So price pulled up, and then when the pullback stopped, when we know the pullback has ended was when price now broke this substructure here. So when it broke, right, because it broke from this point, look at this, price came from here, came down, went up. Before price was able to break this point, it had to go up from here. See, it came close, but it didn't break. Went up. So it broke from here. This was where it broke from, right? So we're expecting price to come out to tap into liquidity, clear the entire high to tap into liquidity because there's no structure to the left. There's no structure. There's no high. It's not like we don't have anything like this along this point. We don't have things like this. Because if it did, price was going to leave this high. It was going to clear this other high here and leave this high. But since we did not have, price had to take out the entire high, which it did with all these candles, right? It did this the first time. It came down from some form of lower low, went up, broke this lower low, and then it's going up again. So this is now we are in a phase where we're expecting a pullback. So we have to go lower to see what we can get from there. Okay, so this was a price broke structure. Yeah, broke structure here. Okay, price broke structure here. Okay, from this point, swung down from this point, went up, created this high. But this is looking like it's not enough because when it came down, it didn't break this low. It just came down here, started forming bullish structure. So we're expecting price to now pull up to an extent, pull up to take out this high, right? Before it starts coming down. So that's just it. Correlating time frames and your candlesticks. And then when you look at these candles, you're seeing bullish pressure from on top, pushing price down. So this is like price is rejecting this area, right? But we've not seen an area here where price rejected yet. We saw price reject from here, so price went up. We saw price rejected from here, so price went up. We've not really seen that rejection around here. So I'm anticipating price to clear this level, come up into it, reject from it before dropping. All right. So that's what we're expecting for Bitcoin from now till this is actually a good position to put in a trade. Let's say a pending order is gonna be here. I'll go this high. Obviously, I have to go down to lower time frames to analyze, but let's just roughly place one here. And then just target somewhere below. Target this low. Overall, it has to be lower, but I'm just going to place my sell. Okay, so that's that. So that's basically what we did. So that's what we're going to end this video with. Just like walk you guys through what was discussed in the morning, and this is going to end at exactly 30 minutes. So it's just going to be 30 minutes broadcast. All right. So I actually appreciate everyone for joining, and as we move on, it's going to be strictly, it's going to be a webinar. This is basically a webinar. This is a webinar, but I don't have much people on, right? But then I'll be jumping on to different other chats, okay? And I'm going to try to pull some more people in All right, so I'm going to leave you guys now and do have a good night rest.